So SDG provided a broad overview and history of how the Act, or the Banking Special Provision Act, the history of how it came about. I will directly go into the provisions that have been included in the Act.
You're the...
I'm the Director, Resolutions and Enforcement Department, Central Bank.
So is that the new department? Or?
Department...
About 2 years ago, when we had this...
So this talks about setting up this resolution department. Is this department?
So that is the Monty Board will have to entrust it to a department, so most probably it will be entrusted to this department.
But it can't engage in any regulatory.
Correct.
Okay, so the draft Banking Special Provisions Act, I will just refer to it as the BSPA.
Before you start, shall we set some time? How long you want to take?
It's about 15 minutes.
Okay, right.
Okay, so basically this gives the resolution measures that can be taken by the central bank and the government to resolve a licensed bank that in case of a crisis situation. Secondly, it ensures the interest of the depositors and the creditors. Thirdly, it also provides for setting up, legalizing the deposit insurance scheme. And also, there's a court-based winding up process for licensed banks. So the bill has been organized into 5 broad sections: the resolution authority of the central bank, the resolution measures, the Sri Lanka Deposit Insurance Scheme, the Financial Sector Crisis Management Committee, and winding up of licensed banks. So as mentioned before, there are provisions to extend the provisions of this Act to licensed finance companies by the central bank through an order. So wherever it refers to a licensed bank, it can be also applied to a licensed finance company. So moving on to the resolution authority, the central bank has been given the responsibility to exercise this resolution authority, and a new department has to be established within the central bank.
චා මේ මට සමාවෙන්න මෙතුමියට මයික් එකක් දෙන්න පුළුවන්ද? මේ ඔය මයික් එක මම හිතන්නේ වැඩ කරනවා මදි. මේ තව මයික් එකක් දෙන්න කරුණා කරලා.
No, if you speak a little louder, I think that'll be fine.
Okay.
Yeah, madam.
So a separate department, separate
Bit,
from
thank
the regulatory and supervisory departments, will be set up to exercise the resolution authority. And within the Act, there are provisions for the regulatory and supervisory departments and other regulatory bodies outside the central bank to provide their cooperation to this particular department. So coming to the main objectives of resolution, it is firstly to ensure the stability of the financial system, to ensure the continuity of any critical functions of licensed banks that may be affected due to a resolution, then the protection of public funds by minimizing the use of public financial support for the purpose of resolution, protection of depositors of licensed banks, and avoiding any destruction of the value of assets, and minimizing any losses to creditors, and also minimizing the overall costs of resolution. The Act also provides for recovery plans of licensed bank. This is a pre-crisis management requirement that has to be met by every licensed bank. Every licensed bank is required to prepare recovery plans as a part of its own risk management process to give in the measures that they will take in the event of a deterioration of the bank's financial position. These recovery plans have to be submitted to the central bank for approval, and they also need to be updated at least annually at the request of the central bank, or in the event that there is a significant change in the business, the legal structure, organizational structure, or financial position of that licensed bank. Next, we move on to the resolution plans, where preparation of the resolution plans is a responsibility of the central bank under this act. Here, the central bank will design resolution plans for each LB which is of systemic importance or which can have systemic impact. Here again, these resolution plans need to be updated periodically or immediately in the event that there is some material change in the situation of the licensed bank. Licensed banks have a duty to provide all the information that is required for effective implementation of these resolution plans. Then this bill also provides for the key components that need to be looked at and included in a resolution plan. Now, the first sections were mainly targeting the systemic importance or systemically banks that can have a systemic impact. But the central bank also has the right to prepare more simplified resolution plans for the more non-systematic banks. Moving on to the resolvability assessments, the central bank should assess whether a licensed bank is resolvable and develop certain resolution measures that are feasible for each bank. So when considering these actions, central bank must ensure that you don't use extraordinary public financial support except for financing mechanisms that are established under this act, and also liquidity assistance in emergency situations from the central bank, whether guaranteed or otherwise. The conditions for resolution are where the central bank is satisfied that a licensed bank is no longer viable, likely to be no longer viable, or has no reasonable prospect of becoming viable. Then the central bank has the right to decide to resolve such licensed bank and to notify the licensed bank in writing and commence implementation of resolution measures. The triggers for resolution included in this act are if the licensed bank has failed or is likely to fail to comply with the provisions of the Banking Act or any requirement or regulation issued thereunder in a manner that would compel the central bank to cancel the license of the licensed bank. Secondly, where the central bank is of the opinion that a licensed bank is insolvent or is likely to become insolvent. Thirdly, where the licensed bank is unable to meet its obligations or is likely to be unable to meet its obligations to depositors or the creditors as they fall due. So those are the triggers. The resolution powers of the central bank include appointing an administrator, effecting a transfer of shares, transferring all selected assets and liabilities transferring all or selected assets and liabilities of a licensed bank, causing a capital increase through existing and new shareholders, requesting the minister to provide capital to establish a bridge bank, and requesting the minister to provide temporary financial assistance for resolution of a licensed bank. Moving on to the Financial Stability Fund. This fund has to be established by the central bank to achieve the objectives of resolution and to ensure that the resolution measures can be effectively implemented. The fund should be managed separately from other assets and the other assets maintained by the central bank. So the possible credits to the fund are budgetary allocations provided by the government, contributions from the government, grants or loans provided by international financial institutions, investment income of the fund, contributions from licensed banks, and finally any income from other sources approved by the minister. Coming to the resolution measures, appointment of an administrator. Here the appointment should be made by the central bank. The administrator should be an independent and fit and proper person. The appointment should be for a term of 6 months and can be extended if necessary. If the administrator should become subject to any disqualification, he should be replaced. And the costs incurred of appointing an administratorship has to be borne by the licensed bank under resolution. The capital increase by existing shareholders, central bank or the administrator with the approval of the central bank may take actions to increase the capital of the licensed bank through issuing new shares. At this point, you need to determine the extent of the losses, prepare financial statements covering amount of such losses from and out of its profits, reserves, and if necessary, the capital of that licensed bank. Secondly is to inform the existing shareholders of the amount of additional capital that will be required and allow them to invest and allow shareholders to subscribe and purchase additional shares. Then coming to the recapitalization by new shareholders. Here the central bank again has to determine the extent of the losses and prepare financial statements. The central bank can cause a revaluation of the stated capital to reflect the losses, may determine the amount and type of funding that is needed to make the licensed bank compliant with the capital requirements. The central bank can cause a licensed bank to issue additional capital in any form as determined by the central bank to comply with capital requirements. The central bank can also require a licensed bank to issue shares, notwithstanding anything to the contrary in any other law. Next resolution measure is the transfer of shares and effect of a merger. Here, the central bank, in whole or part, can transfer shares or effect a merger of any bank under resolution with another financial institution. Then the transferee should be solvent, should have sufficient expertise, capacity and resources to hold these shares so transferred and to achieve the objective of resolution. Then this transfer of shares or effect of a merger has to be conducted by the central bank on a prudent and realistic valuation and has to be carried out by an independent valuer. Next, we move on to the transfer of selected assets and liabilities. Here again, the central bank may, after giving prior notification to the bank subject to resolution, transfer all or part of the assets and liabilities or both at a particular specified date to any third party. Here again, provided such liability or part consists of deposit liabilities, such deposit liabilities shall not be transferred to any entity which is not permitted by law to accept deposits. Next is a bridge bank, where the central bank is of the opinion that the failure of a bank which is of systemic importance or impact, central bank can decide to establish one or more institutions with the approval of the minister for the purpose of continuing the operations or part of the critical functions of the viable operations of that LP, or transferring shares, any one or part of the assets, liabilities, legal rights and obligations, or other property instruments owned or issued by that LP. The initial term for a bridge bank shall be 2 years and can be extended, but in aggregate shall not exceed 5 years. Temporary financial assistance by the government. This temporary assistance shall be provided only if the following conditions are satisfied. Firstly, the financial assistance is necessary to avoid a risk to the financial system. Secondly, if there are no alternative funding through the deposit insurance fund or private sources where it has been depleted or is not sufficient or is not available within a reasonable time frame. Then the losses need to be allocated at least to the shareholders and subordinated debt holders. And finally, the central bank should be of the opinion that that particular licensed bank or the bridge bank will become liable due to this resolution action. Next, we come to capitalization of an LB by the government. Where the government is of the opinion that the failure of a licensed bank can have a systemic importance or impact, it shall have the authority to resolve such bank. The government may infuse capital through participation of the government in the recapitalization of such bank or taking over such licensed bank in a temporary public ownership. I'll move on to the Sri Lanka Deposit Insurance Scheme. The Sri Lanka Deposit Insurance Scheme should be established, administered and managed by the central bank. It insures the deposits made by a depositor of any member institutions, presently that is the licensed bank and the licensed finance companies. The member institutions should pay a premium to the SLDIS, and all eligible deposits shall be insured by the member institutions. Compensation will be paid to eligible depositors upon cancellation of license issued to the member institution. And this fund will be established to make compensation payments to depositors. Next, we move to the Financial Sector Crisis Management Committee. This committee will be established for the purpose of effectively managing and minimizing the impact of any financial crisis which are systemic in nature. So the bill provides for the composition of the committee, the powers, duties and functions of the committee. It enables the identification of crisis times and measures to be taken before as well as during the crisis time. Then the appointment of members to technical committees in support of the Financial Sector Crisis Management Committee is provided for, and it determines the duties and functions of the technical committee. We come to the final section of winding up. And a licensed bank may be wound up by the central bank as a last resort if the resolution measures are not likely to achieve one or more of the objectives of resolution, or if the administrator recommends that the winding up take place, if the assets and liabilities of the licensed bank have been partially transferred, and if the prospects of a successful resolution is unlikely, the licensed bank may be wound up. But the license is cancelled by the central bank, an application has to be made to the court, and the court shall fix a date to support the petition and issue an order of winding up. A separate procedure for winding up, the liquidator's power and duties, and the priority of claims have also been provided for in the Act. That brings me to the end of the presentation. Thank you.
Right, thank you very much for that explanation. I see Honorable Raghavan already wants to raise some questions, but I mean, this is an absolutely essential piece of legislation, and I think this got rushed through, as Mrs. Fernando earlier alluded to, because there was some sort of doubt about the financial stability with the impending domestic debt optimization. So anyway, there doesn't seem to be any impact on the banking system, but nevertheless, it's good that it happened in that we now have this. So going forward, this would be of, hopefully, will not have to be used. These are things that we hope we never use, but we have it. It's like a fire extinguisher in the house. Yes. So having said that, I'll open for comments and questions.
Yes. Thank you, Chair. I think I want to endorse Chairman's comment of this is as a latent but an essential safety mechanism that the learned economists in our country have come through. So I congratulate you for that. And then I think at the committee stage level, I want to endorse that. But I only have this because I am now dealing with our state universities, 17 state universities which are 100 years old, one of them at least. Internationalization of our standards had been an issue here. Now, from your page, presentation page 8, 9, and then 14, and finally the 25, even did not mention any of the comparative levels of our international body. Like, I mean, we are a cultural state, we have personal relationships, we say ayya to everybody, akka to everybody, and all, we get things done. But that's okay, as long as until the last 11th hour we collapse. So I want to find out, in this, do you have a kind of an accepted body like UN? I think there is a UN financial on drugs and other things. At least an outside view, an independent view, not binding, not voting or anything, would be able to tell that we are on the correct path.
We have the Basel International
Okay.
stand. So there are a lot of standards.
Yeah.
And any prudential measure that we take according to those standards, but we adapt it to suit the Sri Lankan situation. That's
Okay.
how it happens always. So Basel is the kind of supervisory body that looks into bank supervision and non-bank supervision.
Right.
They set up the standards.
Right, because we must have some lessons learned from our crisis.
Also, when it comes to IMF missions, they also do the financial sector evaluations.
Okay.
In that also, these are being looked to see whether we are following the principles that are set out by them and also the international standards.
Yeah.
So,
The general public opinion will be, I mean, I'm not saying that I'm representing everybody's opinion, but with all these things, we went into a crisis. I mean, Basel or whatever the international standard, we that committed ourselves earlier, but we went into crisis. So, who is policing the police is the kind of statement. So, central bank is now being more governed, more watched, and then under central bank, I think these banking sectors are governed. That's what you are saying.
there is more accountability to the central
Right.
bank now.
I accept that and I congratulate you for that. Thank you.
Yeah, because one thing here, Honorable Member, is regulatory affairs doesn't fall under this department. That is banking and non-banking regulation. So
We have two
macroprudential.
separate departments, separate acts. So really speaking, I also acknowledge we must not really make use of this law. We have to make use of the supervisory powers and ensure that we supervise them.
Yeah,
No, I was,
please.
no, thing is, now the central bank undertook a asset quality review of all the banks. And then we are probably possessed of what is ailing some of our banks. So isn't there other alternative methods where you try and take the toxic assets out and then try and create another entity to manage before such intervention takes place?
Yeah, I think this is again an international way of financial asset management
Yeah.
companies and asset management kind of SPVs also that we
Yes,
call.
yes.
So really it was a budget proposal for several times, and even last year, for this year also it's a budget proposal.
It just
So
remains
already the Monetary Board has done work on, Central Bank has done work, and Monetary Board has already approved our concept paper and our suggestions to the government, which we will send to the Ministry of Finance. It has already been approved.
That is a bad bank.
A framework to set up
So are you
financial
going to
asset
set up a
management.
bad bank?
Not to set up, it gives an empowering framework. So if anyone wants to have particular toxic asset, they can come and set up a company and then take over that part of town. It's not one company.
I mean,
It's
there's a lot of relevance in what Honorable Hakim is saying, because, I mean, if there are toxic assets before it has a contagion effect on, in the entire bank, you can sort of remove it and put it somewhere else so that you sort of ring fence it.
Yeah, that is what this framework is suggesting, and we will be sending it
So
to the
where
ministry.
will it sit? These toxic assets you take out and put it somewhere else?
SPV, yes.
Yeah, it's called the special purpose vehicles.
Yeah.
So whoever
Which
who
is
wishes.
a bad bank type of thing that you're referring to. I want to ask from the representative from the Banking Association for his observations, if any, on this matter.
Chairman, you're referring to the bad bank or to the particular?
No, to what is proposed here.
Yeah, I think this is essential. This is very common in the OECD markets. We are behind on this one. Thank God the DDO didn't happen, and you'd have used this if there was a DDO. Yeah, this is definitely essential for the industry, but I think the framework within central bank to identify toxic banks would be critical. At what level do we intervene? Is it because of toxic management? The capital ratios are very low, you don't see the future of the bank, the toxic assets are very high. So that internal framework would be critical for central bank to take over some of these banks. But it's critical that we empower central bank to take charge of this situation.
So will there be, now this law is going to go into effect soon, and you will set up all this, but what Honorable Hakim raised, so you said you have already discussed it and you have a plan, right? When is that going to be established?
We will send it to the ministry from the Monetary Board has approved, so we'll have to again work with the Ministry of Finance because.
But is there also an urgency for that or no?
It is good to have that also because there are different views on that very specifically because it has to have a very good governance structure also. If we just set it up and if we just let it operate, it's not going to be okay. So that governance structure has to be very well formulated and strengthened. Otherwise it again will become like the existing banks, anyone giving a loan and then going into bad state kind of thing. So that governance structure, we are really suggesting kind of a private participation also, so that there will be adequate capital put into this.
Yeah, Honorable Chairman, the problem will be the capital. Who's going to put money on a bad bank or a SPV? So those things that we looked into. The bad bank experience so far is not great globally. If you look at the experience, examples. India also set up something. I don't think they reached the full potential. They started about 2 years ago. So there has to be a push from the regulators also take certain toxic assets out and park it in the bad bank and manage, and the governance structure around it, and more importantly, capital. Who's going to put capital will be critical for that.
So what's the bank's view? Bank's view. What is your view? You prefer this kind of legislation over that kind of legislation?
No, if there's a bad bank or the SPV, banks will benefit, sir. Banks will offload the toxic assets into these SPVs at a cost of course.
But this is as an institution, no? That is just a toxic assets you just remove from the portfolio. But here, the bank is already in trouble and you want to resolve it, right? So this is, you're looking at the entirety of the bank, toxic and non-toxic both.
Yeah, in that situation, we have to use these resolution powers. It's not a specific asset, but what SPV is trying to do is take the toxic assets and move that to another bank so that you kind of clean the balance sheet of the bank and we let the bank do their normal operation.
No, but the central bank, their primary duty is to see this banking supervision is properly done when you are looking at Basel rules and
Yes.
lot of laxity has taken place over a period of time. So, this type of, now the moment a decision is taken by this new department, it will create a run on the deposits and various panic buttons will be pushed. Before coming to that panic situation, best thing is to, try and see whether you can bring another legislation to enable SPVs and banks themselves to voluntarily try and, park them elsewhere and then try to clean up their books.
Yeah, so that is what I suggested.
I know the central bank has assisted some of the commercial banks over a period of time, even during the Easter Sunday attacks, thereafter the COVID. They have allowed them to massage their books and then, shareholders to have massive profits. These things have happened. This is why, this country is in this situation. So, it's better that this SPV legislation is expedited fast. This is an extreme step. Before coming to that.
In fact, sir, there were 2 bills also passed, taken up to the parliament, it never passed through. There are 2 bills already. Now, this is the third attempt we are trying.
May I suggest that, so if that is so important as Honorable Hakim is pinpointing, that we are having this last resort, but we need a crisis management situation for which we need that to come into play. So we'll bring those bills here, even a special session, and then go through, and then give you support to get that
We can.
done.
May I just say something?
Sure.
So this will, just to address Honorable Hakim's point, so with regard to as a standing procedure, there will be the banking special provisions law, which will be the resolution law, that is to ensure the revival in the event of any compromise, the revival of a bank towards being as a going concern. to ensure financial system stability, the protection of depositors and creditors. But with regard to toxic assets per se, what he raised, there the Monetary Board has proposed legislation. So as SDG says, the toxic assets of any of these banks would be extricated from those banks and placed in this SPV. However, the importance of it is that it has to be intricately regulated to ensure that there is no misregulation, which can happen obviously. So that is why the legislation, the importance of is at a premium. So if we can urge the committee to look at that as well, I think it stands with the Ministry of Finance.
No, we have to send it.
We have to,
Yeah.
but the approval is there.
Yeah, we approved it.
So we can,
Yeah, I suggest to the committee that we go into this, because I think, as Honorable Hakim said, and we have all been sort of alluding to that fact that we need to look into that. So just make sure that you act on it and speak to the relevant people and make sure that we take a look at it.
Honorable Chairman, if I may add, another area is that you need to probably have a proper bankruptcy procedure here, because the way the law is structured now is that when a company fails, it has to be broken up. You cannot. It's very difficult to resurrect it under the. You have to either sell the assets, but whereas if you have some mechanism where you can strengthen the management, take the management out, and make it to resurrect the business, because unfortunately I get the feeling that we are more concerned on the protection of the entrepreneur than the enterprise. I think we should concentrate on preserving the enterprise, because that's the one that adds more value to the economy. So I think we need to understand that.
Chair, in that presentation, page number 25 addresses that issue, no? That's the way I read it. I don't know if there are any.
No, I'm talking about I'm talking of not necessarily in the banks. I'm talking of when it comes to toxic assets. Yeah. Toxic assets right. Also build up because of this lacuna in this procedure of.
I have two related questions. So you talk about the entrepreneur protecting these shareholder limits in banks. Are they properly regulated? And what are the limits now? And connected parties, how is that regulated?
Up to 10%, there is no approval required. Anyone can acquire up to 10%. Anything more than 10% is considered at material interest. And in assessing the material interest, the bank has to consider the aggregate, that is all connected parties, anybody acting in concert, any trustees, beneficial interest, all that together. So under the law, you can go up to 15% with Monetary Board approval and the concurrence of the Honorable Minister. But to go beyond that, according to a regulation issued, a direction issued by the Monetary Board, there is only in an instance where there is some restructuring required or some capital shortfall is there in a bank, then only the Monetary Board is kind of enabled to give something more than that. Otherwise, the approved limit is 15%. Up to 10%, without any approval, they can go from 10 to 15. With the approval of the Monetary Board. In there also, in assessing a request, Monetary Board has to look at the competitiveness, the healthy kind of competitiveness that is there, and if it is going to be kind of not in favor of the betterment of the industry, then also it's avoided. It cannot approve that kind of a limit.
In this separate department, it does not carry out regulatory and supervisory functions as we discussed. In section 56, for the purpose of this part of the Act, head of the department established under section 4, this one, shall have power to examine and supervise the activities of any member institution.
Yes.
Is there a contradiction there?
No, that is with regard to the powers in this Act, because now when they are going to have resolution powers, and if they are going to have the deposit, administering the deposit insurance, they also need to know about the particular bank. That's what it's not the supervision that is done under the Banking Act, but it is for the purpose of the requirements of this Act, the Banking Special Provisions Act.
and also there is the Monetary Board now. The banks have a duty to formulate their recovery plan, and then the central bank can also under section 9 9(7) actually inquire about the deficiencies of the recovery plan of the banks. They must have a standing recovery plan. So to that extent, I think they, apart from all that, the central bank should be able to assess.
Yeah, I mean, something we hear every day, and in our public days, MPCM may sort of concur with me. Sometimes people come, particularly about this Edirisinghe trust investment and all that, Swarna Mahal and all that, right? A lot of people seem to have got, the wrong end of the stick, right? Golden key, all these things. So the experience thus far hasn't been very pleasant, no? I mean, you haven't been able to resolve these matters effectively. How to respond to that?
ETI and also Swarna Mahal both have been identified as the kind of, we have cancelled their license, and in the case of Swarna Mahal, the business has been transferred to another company. In the case of ETI, now we have filed the liquidation. So its liquidation is filed, so it has to go through the liquidation process. But under the deposit insurance scheme, all depositors have been paid up to 1.1 million, that being the highest amount that they can kind of claim from the deposit.
Let me ask you a question. Are you, as the person in charge of the central bank on this matter, satisfied with yourself as to the duties that you have done to deal with these thousands of depositors who lost money? Citizens, yes. Are you satisfied?
Yes, sir. Now we have set up the deposit insurance was set up really to look after the interest of the small depositors. So if we take the total, I think the significant portion of the depositors have been fully paid.
Are there
So
any
it's
other...
the large depositors who has something more than 1.1 million that is not paid and not has been.
And now you are proposing here to set up a deposit insurance scheme?
No, this is really, now we are proposing, but it's the same thing that will be now brought under the existing.
What is existing will be brought under this.
Yes.
But are there other outside of what we mentioned still for some time now lingering cases that haven't been resolved yet?
We had 6, these are finance companies, so we had 6. For 4, we have now appointed liquidators, right? The Finance, Standard Finance, CIFL and T case, there are 2 cases. Then ETI, it's already winding up, is going.
Yeah,
SD,
DG, the thing is, this has been going on for a
long time. The trust of the,
Yes, please.
I come from a different point. You see, the trust between the state and the citizen is important in number of ways. The contract is always written between the state and the citizen. One of the key areas is these financial areas. So central bank's credibility and discipline is reflected in the general way people, how they look at it. So I think these 2 case studies, bad case studies, my question will be to say, when you have that kind of alarming situation, when the red lights are going, how would the public know about it? Because what happened in my experience in the north, when I was governor there, the red alert companies came with a massive campaign in those areas where the market communication is very poor and tapped the basis of the farmers' funds in order to satisfy their Colombo crisis. Now, therefore, I feel like an authority like central bank must come out and say, I don't know the implications, right? I mean, that's very tricky. If you say one institution is in crisis, that will kind of create a major situation. But the public, the citizen need to know how they will manage with this kind of a amber or red light institution, and that will be my question.
I fully agree, and also as you said, it's kind of a delicate balance there. So if we go out and say, then it can have a run on the entire other institutions also. So what we are currently doing is now we display the names of these authorized institutions, and wherever there are certain deficiencies, those have been highlighted, like they are to say they are deficient with capital, there are some regulatory action taken, like that. In our website, the list of names since recent times, that information is given to any public. Of course, you can say it is not widely available to everyone, but as I said, I think earlier we used to publish this on a kind of a quarterly basis in the papers, the list of names. But again, since we have a mix of companies now, good ones as bad ones, and we can't straight away say bad ones as bad as we kind of, as I mentioned. So we publish this list in the website. But I think now we also learned from whatever has happened, and we are also kind of devoting more, we are strengthening our supervisory action so that we supervise them well, and well in advance we are kind of identify these issues and take proactive measures, take regulatory actions. Now, apart from those companies, on certain other companies also, we are already like curtail deposit taking, lending, then also on the capital, if they don't bring capital,
So
we
there is
again.
a consolidation plan also.
There is also a
So there is a
consolidation
plan.
We had
in
about
respect of which there
58
is, yes.
companies
So
now,
they
it has
are
come down to.
identified into A, B,
Yes.
C categories. Yes. So there are the options are whether they merge, or there's capital infusion, or there is a extinguishing of the company by liquidation.
I mean, my experience, I was trying to suggest, but you are already doing the ranking system.
Yes.
Now,
ranking
Sri Lankan universities, 17 universities that I'm responsible right now, global rankings are so low, but I said, okay, but what about the intra ranking about our universities? So maybe a ranking system will put people also on the awareness.
I mean, here we have no, because these are traded and they have ratings. You know, they have AA, AAA, they have, you know, so there is a rating system by Fitch and others. So generally, people who are investing are aware, but not necessarily, I agree, depositors. I have a question now. You did an asset quality review, Mr. Hakim asked you that question. Did you find any banks that needed greater attention from the central bank?
Yeah, now we did for 3 private banks and 2 state banks. Now this is really to look at the assets and then see whether additional impairment, that is provisioning, is needed to ensure that standards are met. So in the case of private banks, of course, the requirement is not that significant, and we feel the banks themselves can either improve their risk management and then kind of not have that impairment, or they can also probably within their systems they can raise those capital. But of course, in the case of 2 state banks, it's a significant amount.
We don't want to
Honorable
discuss
Chairman, that was on the
issue.
basis that they would not have been affected by any domestic debt restructuring. If that had been imposed, all banks would have been in serious deficiency.
Yes, and also now on the external debt, we are going to tell the consultants to do that assessment also, because this was only on the loan book. Now external debt, because some banks are exposed to ISBs and SLDBs, so that exercise will also be done. And
I mean, you know, Honorable Ranawaka, when he left, he wanted me to bring this up again. We've asked you to submit some information on, you know, bad loans, you know, and these bad loans, how they were given, etc. There is a, you know, discussion in this country. And yes, you know, some state banks may be in some sort of, you know, quality of the assets may have been eroded, but then, you know, there are reasons behind it also. I don't want to get into it, but just mentioning here that this committee has requested you for some information, and we accept.
so I thought that was from the banks, that it was from the respective banks, it was asked, no, that day when they came for the previous meeting, because really we don't have that detail. We don't go into the individual details.
Yeah,
I think one of the
just
CEOs also
take a look at
agreed
it,
to-
who it was addressed to. I
Mr.
have-
Chairman, one matter that we have discussed a lot on the monetary board, and one that I would like to formally urge before this committee, is for the committee to consider making a recommendation of amendment to the 2 state bank statutes, actually 3, where with regard to the appointment of directors,
Fit and proper.
yes, no, fit and proper, and also based on considerations other than technocracy and expertise. That is vital, because going forward, I can't overemphasize the need to ensure that these are driven and steered by persons who are fit for the job.
And
I
even the number
100%
of
agree with you. We all agree with you.
Yeah.
Yeah. Mr. Fonseca?
And even the number of directors, for instance, a bank like Bank of Ceylon, which is the largest bank, I think by its statute has only 5 directors. So which is, I mean, insufficient for a bank of that complexity to because you need various committees, various things to manage various aspects. So this has been now pending for, I don't
According
know.
Yeah, I mean, given that we are talking about this matter, I think it is prudent, our committee,
so just-
bring this up.
So just one other comment. So just to be diplomatic, for want of a better phrase, if you appoint to these banks those who are less than acquainted with banking expertise or other relevant fields, then the question is that any demands that have been hitherto made by the Treasury or by the 100% owner of those banks, which is the state, have not been resisted, and thereby depleting and impairing those banks almost to the ground. That has been a serious threat to financial system stability that we have encountered.
Yeah, Chairman, I wish to go on under my name the record. The fundamental golden lesson that we learn from this crisis is that the state bank managements and whom we appoint as people who are qualified in those areas to look into proactively and predictably look into who people will be qualified to do this.
So let me ask you this question. Every director appointed to state banks also have to get through the fit and proper criteria, correct?
Yes.
No, that's right, but the issue is with
No, I understand your point. Is
The
a,
PEPs, that is the issue. Politically exposed persons.
on these boards?
Yes, I mean, I'm not talking in any particular instance, but if you look at historically, they have been politically exposed persons.
Or the proxies of them.
Yes, or the proxies of them. Then the question is their ability to actually resist of the regime in power at any given time, right? Their ability to resist the demands from the DST on the account, and then the SOEs, and they are servicing those. So we have found also, and that is something that we have put in our Dr. Chairman and my affidavit also. We have found that, for instance, non-essential imports on a wanton basis, where state banks have actually dissipated vital dollar positions that they have held for those purposes.
So now who appoints this? It's relevant in this context, right? I mean, is it the minister at his own discretion, or does it go to a constitutional council, or how does it happen?
It's the Minister of
Minister of
Finance.
Finance.
Minister.
At his own discretion,
Yes.
and then goes to a fit and proper, and that's it.
Yes.
Right. I have a couple other questions before we end this. Now, in some countries, there are calculation methodologies in estimating liquidation value, etc. Like, for instance, research found that this Dodd-Frank Act addresses those. And it is fairly clear and transparent how it is going to be done. But in this case, it just leaves a lot of guesswork how one would apply these.
Yes, we haven't
Numbers.
introduced those to the law, but we have the standard ways like equity measures and all that. But still, in our regulations, we can always bring in those valuation methods.
You
and all.
can bring in, or should you bring in?
In the sense, we will always have a framework, because otherwise it becomes ad hoc measures.
Correct.
that
So
we
these
take.
regulations will become part and parcel of
So,
this act?
we can introduce those regulations or directions, whatever, internal
Yeah.
framework, which we can take.
Yeah,
That's
we
the suggestion.
strongly suggest, I think the membership agrees that we should have those in place, so that we remove the non-transparency of this, because at a later date, one could accuse this department of using ad hoc methods to do the valuation of one bank
We'll
as
certainly-
opposed to another.
We'll certainly take note of that and.
Yeah. Who reviews the administrator or the administrator's assessment?
It is under the monetary board, so it will be accountable to the monetary board.
So there is no
Appointed by
auditor, the auditor, the auditor's office. Does it have any role? I mean, or is it all completely sort of home and home? Because is there any outside party?
We have not envisaged such provision.
What about other countries? What is best practice?
Yes, you should not.
Is that correct? That most administrators would end up being audit firms?
Not in this case, really, because it has to be someone who's familiar with banking and business to take over.
So what I'm saying is there an oversight?
Oversight will be by the central bank, the governing board, because they are appointed by the governing board. Governing board will give their TOR what they have to do, and the law also provides what they have expected to do. So it's a very restricted operation that administrator has, because it's stated in the law, and they are accountable to the monetary.
When you're making regulations, I think you should pay attention to this issue. A couple of more last points. Maximum amount of compensation,
Yes,
right? Is there some
currently it's from the deposit insurance, it's 1.1 million.
now is that nominal value of 1.1 million
Yes.
has become half that after inflation last year? Should you not have some sort of index that this minimum sum?
Thing is, now it depends on the size of the fund. So we are only getting a premium from the member institutions and building up this fund. So if that is the case, then maybe we have to have other sources also to contribute to the fund.
Let us ask the bank's view on this. How does the Bankers Association view this? Compensation paid to a depositor is limited, by some figure that was established pre-crisis.
Also, before you come in, this is my stupidity, I don't know about this. But insurance funds are being reinsured.
Yes.
Right. So banks, do they have of their own reinsuring?
No.
Yeah, so that's a key issue, because ours is a rupee, let's say largely a rupee economy. So when you reinsure, it will be a small amount in terms of a sterling pound or hard currency, right? So I am thinking, if the insurance companies are reinsuring with Swiss Bank or whatever, why not our banks think about something like that? So that your coming in will have more meaning. And that will be the banking operational cost.
Yeah.
I'll ask the first one. I think the deposit insurance is by the central bank, so we rely on central bank for that. But there are
Yes, sir. Now we are talking about central bank being not able to stand on his own, no.
Yeah,
But we have been through.
Correct. So there are global insurance companies who will reinsure that. There will be a huge cost attached to it. So there are those processes. Even during this crisis, I represent a bank and we looked at insuring our base here. So there are ways of doing it, but the cost I don't think Sri Lankan typical depositor can afford.
As against a broken country.
I mean, the cost will be.
Are you saying that it is even more costlier than having our parliament declaring our state is broken?
In fact, some of the insurance companies.
Yes,
foreign
obviously it will
insurance-
pass on to the depositor. There will be, but the banks are now declaring, commercial banks are declaring, even state banks are declaring their P&L, no. No bank has said they are losing. So I do not know where this whole thing coming and saying it's very costly.
No, I mean, it
So
all
then
depends
No,
on
reinsurance
how
is costly. I mean, whether you
Yeah.
like or not, there'll be cost attached to
you
it.
see, because Honorable Member, it is based also on how the bank is governed. Now, if you're looking at Standard Chartered or HSBC or some global bank, there are certain regulations and what we alluded to earlier of directors, etc. There is a certain minimum governance structure. But some of these state banks, like we just heard, don't really have those structures. And in such a situation, how would a reinsurance company assess the risk of such banks going under? I mean, I would think the probability would be quite high. If the probability is high.
So let's start with the private sector. Let's start with the private sector.
I don't think we want to get into that because that's a mandate of the central bank as
I'm flagging that issue. I'm saying there are ways.
I mean, that is a completely different position to what we currently have. Our ecosystem is such that the central bank is the regulator and the central bank has now set up this deposit insurance
We are
scheme, etc.
reinsuring really, then we have to reinsure the deposit insurance fund, because now
Yes.
we have the insurance, so it has to be. But I have experience now in the past few months, the insurance companies also were trying to get some reinsurance overseas, but because of the risk premium and all, they didn't even get the bids that they had to, so that difficulty is also there. When things are bad, they don't really want to provide that reinsurance, or it will be very costly, as was said by
Yeah.
Mr. Binguma.
Then is there a limit, time limit? Now, so we were just discussing, for years, compensation claims have been just dragging and dragging. So should you not have some limits in terms of time that you need to resolve this by such and such a time limit?
There is a limit in the law. It says 6 years to complete.
Huh?
Of course, I know it's going to be.
6
That is because of our other legal system. So if we can improve that side, because there is.
How
legal
long does it
system
normally
also.
take to conclude a case?
Liquidation can take even 20 years, yeah, under the current system.
So 6 years is
6 years is short.
Improves, definitely this will get short in the 6 years.
so when this is done, so you talked about shareholders, issuing new shares, selling off back, shares to others. What is the shareholder representation in these negotiations?
We have directors in the boards representing shareholders, the non-independent directors. So in taking decisions, they will also get involved. So that first course will be to tell the existing shareholders to contribute to the capital. So when we find that it is not possible only, we will be moving to other actions.
My last question is do you sort of report regularly? Yes, under the new Central Bank Act, you have to report to Parliament once a quarter.
Yeah.
So is there some requirement that the activities of this department is also included in that report, or is it not specifically stated?
That is more on the monetary policy side of it, but
On the regulation side of it?
we
I mean,
can
in your report to Parliament once a quarter, isn't there a requirement for the financial stability issues also to be brought up to Parliament? Or is it only the monetary policy?
We can, overall central bank operations, we can report that. That's,
Yeah, I mean, I think this
quarterly we
committee should insist that not only on the monetary policy side, but on the regulatory side, that this report to Parliament should include a timely report.
Because on what you say, Mr. Chairman, any impact on financial system stability can affect economic stability, and therefore that can come within the purview of this committee. Quite irrespective of whatever the new Central Bank Act says, my point is on what you say. Any impact or impairment on financial system stability of financial institutions can obviously have a trickle-down effect and contagion effect on economic stability of the country. And therefore, that would come within the broad parameters of this committee.
No, that I understand, Mr. Javadar. What I'm saying is, in the specified report,
Yes.
thing structure.
So we have to look at that, whether, I think it's monetary policy, is it monetary?
Yeah, you can look at that. And I think this committee feels that it should be included, isn't it?
No,
just-
Honorable
yeah.
Hakim.
One final question, I think this country also needs a proper updated insolvency law.
Implementation.
You see, because that is also a
82
very,
days.
very serious lacuna. So, from the point of view of a genuine entrepreneur, right? I mean, if the banks foreclose and then if he is pushed into insolvency, he is without any protection. So there must be some, we have to update our insolvency laws. So I think Ministry of Finance, the Additional Secretary is here. I think this is something that you will have to put it on your drawing board and then expedite and bring the bill here.
So this is explicit there.
What is
The
explicit there?
Governor of the Central Bank shall ensure that the Central Bank shall, within a period of 4 months, after the close of each financial year, publish and lay before Parliament through the Minister a report approved by the Governing Board on the state of the economy during such financial year, emphasizing its policy objectives
Yeah.
and the condition of the financial system.
Okay,
The
right.
report shall include a review and an assessment of the policy of the central bank followed during such financial system issue.
Right. So on the insolvency law, you are working on it?
On the insolvency law, the Law Commission was apprised of the fact that there was a joint cabinet paper of the President and the Minister of Justice mooting that to the cabinet and bringing that within the purview of the Law Commission to make its recommendations.
Now, may I make a suggestion, please? Now, SMEs, could there be some simpler sort of bankruptcy Chapter 11 type legislation that can be specifically brought in, because corporates are complex and there are lots of stakeholders. But if you take an SME, it is a small and a manageable thing, and perhaps you can make some amendments to some existing law or just use copy paste. I'm not saying it should, but I mean look at other countries and create a simplified.
Yes, so we are looking at it's been taken as a top priority matter.
Okay.
In fact, Mr. Vignesaran is also representing the AG there. I am also a member.
Yeah.
The Law Commission, we are taking that top priority.
With SME.
Yes.
So
And
sort of a
and we are
Chapter
looking
11.
across the board, all corporate revival and insolvency.
SME definition varies. It depends on whether.
Yeah, now the Ministry of Industries and Central Bank has kind of formulated, maximum is the 1 billion and also on the number of employees, but within that 1 billion, they have broken it to 3, micro, small and medium. So there is a definition. I think they are going to submit, Ministry of Industry is going to submit a cabinet paper to get that approved, which will be the national.
That revenue, annual revenue.
On the turnover and number of employees.
Right. And what is the, okay, right. We'll wait for that. Then, are there any other questions on this? Okay, so, I mean, given that there's been a discussion on this, questions were asked, I think you all provided information that was requested by the members. I have no issue with this.
This new law relating to SPVs to park toxic assets.
Yes, so
There must be some time frame.
So what we will do, Honorable Hakim, is based on this discussion, we will write to the Governor and the Secretary to the Ministry of Finance, explicitly making references to the issues that were brought up today, right? And in particular, this matter. And we shall request them to come back to us on those. Then I think the committee is able to approve this so that we can send it up for debate next week. That's all, except Mr. Honorable Ranawaka raised a question which he wanted some explanation. If you can give it now, you can. If not, you can do it later.
I think it's about whether the central bank pension fund is subject to the domestic debt restructuring.
Yeah.
The debt restructuring is for all superannuation funds. So therefore, the central bank provident fund is also subject to the same.
Yeah, there's been some discussion we've been reading, and I also saw an interview by the governor, that the central bank has a different superannuation fund. Is it significantly different in terms of the returns the members or the employees of the central bank receive
Yes,
with respect to the EPF?
Yeah, with regard to that, there is a kind of Monetary Board decision, and based on that decision only, the returns are paid. So this decision has been taken in 2013. Since then, what it says is either the rate at the end of the year or the average, whichever is higher, there is some way of computing. So, sir, if we look at now, I have the rates EPF has paid and also the central bank has paid. So it has varied now. If we take from 2013, When EPF paid 11, the central bank fund has paid 10%. Again, when 10% was paid in the EPF, we have paid 6%. Again, 10%, 7%.
Can you chronologically read?
Yeah. If it is EPF like paid 11, 10, 10, 10, 10, 9, 9.25, 9, 9, 9. And central bank 10.65, 6.73, 7.11, 10.2, 10.07, 11.2, 9.4, 6.37, 8.26, and this last one is the 29%.
Last one is
Yes,
only 29%. Why? So others seem fairly
Because it's
equal.
the average of the year and the year end, whichever the lower. So when the year end was lower, treasury bill rate. For EPF, we take the entire return and look at what is available and pay the return to the members for the year. But here there is a policy decision that has been taken.
So let me get this clarification. So now you have a portfolio of bills and bonds, no?
Yes.
Now the portfolio didn't return 29%,
No,
did it?
no. This is.
Then how did you pay 29%?
So that is the board decision that we have in 2013, how to compute that. It is.
No, wait. Now, what you're saying is the pension fund didn't actually earn 29%.
Yes.
It did not earn.
It hasn't, yes.
But the employees were paid 29%.
29%.
Based on a policy decision.
Based on the decision that has been taken, how a return of the pension.
When was the monetary board decision taken?
2013. In fact, now this time the monetary board, after observing this, they have wanted to review this, and we are in the process of reviewing this policy decision.
Because I think it needs to be reviewed.
Yes,
I mean,
exactly.
it looks like
It needs to be reviewed, Chairman, that is correct. I mean, so there is no connection between the amount earned by the fund and the actual. That is why in some years, even if the fund may have earned more, but what was applied to the fund was based on those treasury bill rates.
Yeah, but it's very ad hoc, no, Mr. Fonseca. I mean, you have a pension fund, just let me, right? You have a pension fund that is invested. And depending on how efficiently you invest that pension fund, you have a return. And the members are entitled to that return. But if you have a return determined by some other means, and the pension fund doesn't actually make that money, then where is the shortfall funded by?
That has been funded by the central bank. If there's a shortfall,
Doesn't that contradict? No, I want to ask that question. No, you are raising an important point. Now, in the Central Bank Act, is there a provision to take monies from the central bank and pay the difference of the pension funds deficit?
I don't know if there's a specific provision, but basically this will go as a part of employee remuneration package. So I think this decision goes back, I think not to 2013, it is 1994 originally.
That's why the monetary board now thinks that it must be reviewed.
There is a provision to set up the provident fund.
No, first you said it's 2013.
Yeah, I made a mistake, that's
1994.
Yes.
It has a decision, so from then on this has been, for whatever reason at that point in time, the board has decided that this should be the way that the distribution rate should be determined. So, okay. So speaking for myself, I fully agree that it is flawed. So that is why, so when it came to our attention, but the point that is also relevant is that there are years in which the payment to the Central Bank Provident Fund has been lower than the EPF as well.
I appreciate your point that you say that this is flawed. I appreciate that. I think it is flawed myself because it has to have some connection. It can't be arbitrary. Now, this is arbitrary, right? So anyway, so we have the answer to the honorable member's question, and I'm glad that you said you're looking at it because I think equity matters, no? Right? People would like to see everybody taking the same pain as everyone else. So thank you very much, and we are waiting for the response from the governor and the secretary. and we would like to have it in the next day or two. We've sent you this letter last week. Yes.
Yes,
We need to have it.
Yes.
This committee needs to have it.
Yes.
Right.
That
Thank you.
information that is readily available, we will send it soon, and also working on the other ones also to send it even fast as possible.
Thank you very much.